Test, test. Mic check. All right, all right, all right. Good evening, everyone. It's about 10 o'clock, 10:18 p.m. Eastern here, and wanted to come by and let you know that we are going to do a market review for today. I was not here at all today. I do see some folks join the live. Thank you for joining. I hope to be here tomorrow for that, but it'll depend on my meetings, of course, and whether or not I have break times. But gotta say, not a big fan of my last market review. I was very, very tired, if you couldn't tell. Please don't watch it. Kind of embarrassing. This one will be better, I promise. So let's get into the charts and see what happened today. We're going to take a look at that. All right. So we are going to start on the daily. So remember, at the beginning of the week when we started here, we had this Friday candle go up and end there. I was thinking that we were actually going to go up further than we did this week, but yesterday's review, we did also see that there's this monthly inversion fair value gap. What does that mean? That means price went up, closed down on the monthly candle, and we've now come back up to revisit it, and we see an immediate rebalance downwards to that weekly volume imbalance. So that's what we were aiming for this week, and we see that the market has gone up, started down, and now let's see what happens within this area. I think the draw is still down to this monthly, weekly premium BISI high, and then further down, I think there's a weekly premium BISI consequent encroachment followed by the low here and a previous intermediate term high. So this area is where I think we're going to draw down to potentially this week. But tomorrow, there's not a very large amount of economic data coming out until Thursday with unemployment Thursday and Friday with the core PCE price index. Tomorrow is just a 8 and 8:30 a.m. There's some medium stuff at core durable goods at 8:30 a.m. But I don't think that it's going to be enough to really merit very much. We do see that there's a little bit of a gap to fill as we take a look at the daily and the previous day's low here. So we're going to be marking the low for this day, the low of this day, running it out over time, and seeing how price reacts at that level. So let's take a look and see at a lower time frame what happened on a 60-minute now, because today was really interesting. I was looking at this earlier today, and I thought that it was very fascinating price action. So we know that on the hourly, this week started here. We have since gone up, down, kind of zigzagged, took out this higher high yesterday. Today at Asia, we took out this higher high, and then we started to see movement back down into this short-term low, and ultimately from a previous long-term sell-side liquidity here. Now we've touched there and bounced, touched there and bounced, touched there and bounced, created a new short-term low to aim for. And we do see that we went back down to this, bounced back up. Lots of people thinking that this is a support now. And then during New York, we end up reaching into this fair value gap, which we'll show on the 15-minute to be a little bit closer. We show that. We see that it retraces. And actually, if we take a fib from that high, actually, we could probably take it even from this high too. Take a fib from that high to that low, draw it out over time. We can kind of see that it's raised every time it went above equilibrium in this price range. It's just dropped. So that was a good indication that, and this actually reached optimal trade entry as well. So that was a good indication on the hourly that we were going to go lower. And one thing that I want to project as well is this swing projection down to 1 standard deviation below. We hit exactly that, and then some, into this weekly volume imbalance. So that's what I would have been looking for had I been around here, had I been seeing price bobble up into this. I was going to be looking for that south side. Let's go down into a shorter time frame in order to really pick out what was there. So if you recall, if you were here in the morning, thank you for joining, but if you were here in the morning, if you remember, I had these two fair value gaps drawn out. What I wanted to see with this is I could see this short-term low form. I could also see that this kept on rejecting here. I hadn't drawn it out as far until a little bit later, but I meant to draw this out until 5 o'clock p.m. But what happens during New York, before New York opens, we see price continue to bounce off of this fair value gap and continue upwards until it takes this buy side liquidity. Oops, let me keep that there for now. So we kind of see here our buy side liquidity gets taken once, twice, 3 times, and it's been rejected. Every single time it's rejected. So on the 15-minute, there's your area of liquidity being taken. It's within a premium fair value gap, sell side imbalance. And so with that, we can take with confidence and aim for this low here, possibly these relative equal lows here, which we marked out yesterday. And what does price do after that? Breaks very much so through there. Now we want to keep an eye on this low or this low to see what happens, right? So this first low, we can see it jumped off of that in the afternoon during the 10 a.m. Silver bullet. We see on the 15-minute, we have this silver bullet here, ripe for the taking. We're actually going to go down and look at this this price action on a lower time frame too, to showcase that immediate rebalance from that inversion fair value gap. Silver bullet formed here. You can come take that at any point here. It would have been about 20 points that you would have had the weather, 25 points. So if you found this on the lower time frame, it's a little bit clearer. And then from that point onwards, it revisits this mitigation area and rejects straight off of that to the bottom of the volume imbalance, which is what we were targeting this whole week. So very exciting that happened today, and glad that we saw that and called that out prior to. So you can go back to the weekly market review. That's exactly what we were aiming for, still bearish. So let's take a look on the 5-minute. What did we see? So even on the 5-minute, there's this same fair value gap here, and price could not hold. Once we saw this break and break down, we see this fair value gap, or this new week opening gap. Immediately it touches it and continues downwards. We do see that this kind of like creates a fair value gap on the way down. So fair value gap forms here. This is a breakaway gap, and this fair value gap institutional order flow entry goes to target these lows here, comes back, hits this order block, and then during New York Open, and then proceeds to take all those sell side liquidity out. Notice on the 5-minute that we went down past this inversion fair value gap, closed at the very top, and then proceeded to move downwards. I find that to be very interesting on the 5-minute. And actually, when we look down at the rest of the day, we can see that on this leg down is a swing itself. We can see that above equilibrium here, there's this fair value gap. Price respected it. It did go over it. It definitely did go over it, about 20 handles. That would have been really tough to stomach if you went short right at the beginning here. So you would have had to take that heat for about 10 minutes. And then if you could do that, that would have rewarded you with about 20, 40, nearly 60 points before it jumped up. And you could have targeted this stop here. So that's still a really big move. And it would have stopped a lot of you out though, to be fair. So with these, when there's multiple fair value gaps, you need to make room for it to move up into the second one. So your stop would have been the mean threshold of this top one or above this. And that might have been too much risk for folks. So if that is, we're going to look into the down into one more time frame, the minute time frame. We're going to see if there are any plays that we can scope out as of today. So let's go down in the 1 minute. We're going to go back to London. So on the 1 minute chart, you would have seen this forming all throughout the day. And then in the morning, you would have seen this rocket up to there. It tests it and seemingly creates a low there. That would have been a little bit suspect here, because what we see is if you went short here, you would have had to withstand about 15 points up there and then some, because that would have taken out the stops here. And then we're starting to get to a little bit of a drop here. We see a volume imbalance form. We see price go back up to that volume imbalance or immediately reject there and continue downwards. And so with this 1 minute formation here, we can see that price went down to that point, continued downwards past this short-term liquidity low for sell side, and during the open, we see it take this buy side liquidity and almost immediately reject off of there. So keep in mind, this is a 5 minute inverted fair value gap. So either it was going to go up, bounce off of this and continue upwards, or come here. Now, when it trades down through it and up again and back down, we see that we have a signature here. We're looking for this to give us an immediate rebalance downwards, which it does. And it blasts through these areas of liquidity, continues here, uses this as a mitigation point where there are some longs that went long way back here. They are selling here. This can be certainly used as a sell area. And from there, you also have people going short too. So we start to see some this first run up to this fair value gap that would have stopped a lot of these folks out. And then, of course, later on, a few minutes later into the 12 o'clock hour, we see it price go back to this point, which is a previous low, short-term low, and reject from there and hit the rest of the fair value gap, the volume imbalance here. So very exciting. I think that even if you were looking at this in the morning, you would have seen that on the 5 minute. I think that would have been a sufficient one to look at. You can see that you took this sell side or buy side liquidity out and took out this short-term low and this intermediate term low here. And this is where you would have expected to see a mitigation or a high, low, higher high, or high, low, higher high there. And you can kind of see that breaker form right there. So 2 breakers right here and a return to both of those breakers and a shift downwards from that point in time. Inversion, fair value gap here, and it's treated as such. That would have been the play, knowing that we had a bias down because of this volume imbalance here. And right now, volume imbalance has kind of been taking price in and out. We don't have as clear a range as we had in Asia, but that's what we are looking for next. So let's go back to the daily here. So far, we've come up, rose down, or shifted down, and now I would anticipate a little bit of uncertainty around this area. Don't know if we're going to get the big runs. We already ran for a area of liquidity on the weekly, but I do think that there is a really key one at 14,621.75. So I'm going to have my eyes on that if we're going to get a weekly expansion further down. But we did touch a weekly imbalance already, so that's what I'll be also watching to see if we reverse at that point in time or not. I could see us going into the consequent encroachment of this wick or this bearish order block. I would prefer this one here because this is the low of this day. Is also at the consequent encroachment of this wick. So I could see us going up there and then dropping. Or depending on how this candle does, we certainly do have two areas of liquidity on the daily which have now formed above. So 2 targets above and higher time frame target below. So even higher than the daily. So I am thinking we don't make it up to those daily fair value gaps, but that we continue down until we hit this. But let's see, let's see what happens tomorrow. I think that's it though. I think that we still have some room downwards. I don't want to take any trades in the opposite direction until we prove otherwise on an hourly or above. So with that, I think that is it for tonight. You know where I'm aiming for tomorrow. Again, since there are targets on the top side and the bottom side, I'm being careful. I'm still only trading one contract at a time right now. I will make sure that I finish the other 4 performance accounts too, and then we'll copy trade from there. So yeah, I think that's it. Let me know if you have any questions. I am going to close out the review for tonight, but I will see you bright and early tomorrow. Remember, the only economic events are at 8:30 in the morning, so we might see some movement at 7 o'clock in the morning. Once New York opens, I will try to be awake and recording for that. Until that point in time, again, I started to see some of you have come on and subscribed, so thank you very much for that. I hope this type of talking through ICT concepts in this fashion, I hope this provides you with a resource that you can use as well. So with that, I'm going to close the stream. Thank you very much. Have a good night, get some sleep, and we'll catch up with trading tomorrow morning. Take care.